Yvonne Elliman and Love Me. So are you tempted? Pour some of your money into gold. Well, we heard from the jeweller a moment ago. He's been doing the job for 40 years, saying he's never seen a time like it. But then he would say that, wouldn't he? Is it a really good investment, and is now the right time? Jonathan Davis is an economist and wealth manager based in Hertfordshire. Can answer that question, I hope. He's on the line now. Jonathan, good evening.
Good evening.
Historically, how has the value of gold changed?
Well, on the one hand, we could look at 5,000 years of history of gold. It's an interesting thing that if you were a senator in ancient Rome 5,000 years ago, you had your toga, a leather belt, and leather sandals. That would have cost you 1 ounce of gold. And of course, the funny thing is, if you go into a good men's outfitters and buy a good suit, a pair of leather shoes, a leather belt, do you know what? It's about 1 ounce of gold. So gold has clearly preserved capital over the extraordinary long term. In fact, it's probably the only asset that we can say for certain has preserved wealth. Over much shorter periods, say the last 40 years, it's been up and down like a yo-yo. Bring it shorter again, the history is this. At the turn of the century, gold in dollars was about $250 to $300 an ounce, and it soared to $1,900 by 2011. So $250 to $300 in 2001, $1,900 in 2011, and where are we today? About $1,100. So it's very volatile, as many financial assets are, but there's no question at a 40% discount is the way we look at it. On a medium-term view, it's a good buy.
And I suppose what's attractive about it as well is that you can start quite small, can't you? I was just looking at the Royal Mail. I mean, it's the Royal Mint, beg your pardon. Everyone trusts the Royal Mint, and you can buy directly from them, and you can buy something if you want for 250 quid.
I would certainly strongly commend anyone who is starting to build a wealth, a capital for their future, to do so on a frequent and regular basis, and to not even be concerned if the price were to go down in the relatively short term, because if you're buying it month by month, you'll just buy a little bit more. On a 3, 4, 5, 6 year view, yes, I think the price where we are now is very attractive. That isn't to say that it couldn't go down a little bit further. It could do, but if you're buying on a monthly basis, it shouldn't be an issue. You should still sleep soundly, because in the medium term, it's very good purchase price as we have right now.
I mean, do people that you advise worry about owning physical objects? They think, well, I can put this money in the bank. It should be, well, one hopes relatively safe. But if I have those possessions around me, well, they're not as safe. They could be lost. They could be stolen.
Sure. I mean, it's an interesting customer, the jeweler there, the soldier who's been buying it on a monthly basis. I'd be very interested to know what he's doing with his coins that he's buying. Most people would not be doing it on that basis. They'd have a broker or a jeweler from whom they buy the gold, store it in a bullion vault for them. It's not very expensive. It's a very small percentage of the value on an annual basis. That's the most secure way. And of course, you've got all the registration certificates. So, it's your gold, that part of the vault. Most people would not have it at home.
It does appear to me, just listening to the news as I do every day, reading the newspapers, that we're at a strange time in the UK economy at the moment. It seemed to me that we started the year only a matter of weeks ago thinking 2016 wouldn't be too bad. Suddenly there are these jitters all over the place. Clearly oil prices are falling. Is that all that's causing these worries?
Well, Mark, I have to say, I don't know who was saying that 2016 was looking good as we went into it, because I can tell you for the last 6-9 months, I've been calling for sharply lower growth in 2016. You say the oil price is falling. The oil price, which of course is a major part of the world economy, has been falling for a year and a half, and it's fallen 70%. Clearly, there is falling demand for oil. That must suggest there's a slowing economy. If you think about it, in 2014, the UK had 3% growth. The figures just came out today for 2015, 2% growth. And I'm forecasting sub 1% growth this year, maybe even a recession. There's no question that we're entering a period of very slow growth, if at all. And your listeners need to get this very important point. For the last 40 years, whenever we've gone into a slow growth or recession, for 40 years, the one thing the policymakers have done is slashed interest rates. It's a funny thing. We're practically at zero. They can't slash interest rates again. And that has got to be making the Bank of England people lose sleep.
Goodness gracious. Concerning times, worrying times. Thank you, Jonathan, for flagging that up. Jonathan Davis, economist and wealth manager, looking ahead to 2016 and sub 1% growth and sleepless Bank of England managers. Oh, my goodness. Do you feel positive financially for this year? Well, I know 28th of January is a really, really bad time to ask you that question, because who is, for goodness sake? Hungry eyes waiting for the next paycheck. Here's Eric Carmen.